Welcome to The Swing, the official newsletter of the Forex Trade Room, Volume 21, July 14, 2024. The dollar index fell to 104.3 on Friday, marking a second consecutive week of decline. Investor expectations for Fed rate cuts increased despite higher-than-expected producer prices in June. Recent data points to cooling U.S. inflation, with the annual inflation rate dropping to 3% in June, below market expectations. Markets are now pricing in a 90% chance of a rate cut in September, up from 70% earlier this week, with a potential second cut before year-end. The Australian dollar held above 67 cents, its strongest level since early January, as the US dollar weakened following a cooler-than-expected inflation report. This solidified expectations for a Federal Reserve rate cut in September. Meanwhile, the Reserve Bank of Australia is expected to delay rate cuts amid persistent domestic inflation, with markets seeing a 20% chance of a rate hike in August. The Aussie also rose to near two-year highs against the New Zealand dollar but retreated from 33-year highs versus the yen due to suspected intervention by Japanese authorities. The Canadian dollar strengthened to 1.36 per USD in July, reaching an 8-week high. This increase was driven by a weaker US dollar following softer US inflation data, which boosted expectations for Federal Reserve rate cuts in September. This development balanced the outlook for both the Federal Reserve and the Bank of Canada. Canada's macroeconomic backdrop supports bets that the Bank of Canada will continue lowering borrowing costs, with the unemployment rate rising to 6.4% in June and employment falling by 1.4K, contrary to the expected increase of 22.5K. The Japanese yen surged past 158 per dollar this past Friday and is expected to remain volatile. This follows a sharp rebound last Thursday, likely due to suspected intervention by Japanese authorities after cooler-than-expected U.S. inflation data. On Thursday, the yen rose 2.6% to 157.42 per dollar amid extraordinary trading volumes, suggesting intervention from the Ministry of Finance after the yen hit 38-year lows earlier in the week. Masato Kanda, Japan's top currency diplomat, did not confirm whether the government was involved. Investors are now focusing on the Bank of Japan's policy meeting in late July, where bond purchase tapering and potential interest rate hikes are anticipated. The New Zealand dollar rose to 61 cents amid a softer US dollar following weaker-than-expected US June CPI data, which reinforced expectations that the Federal Reserve will cut interest rates this year. Investors are now closely watching the US June PPI report for further insights. Domestically, the Reserve Bank of New Zealand held the cash rate steady at 5.5% for the 8th consecutive time but signaled potential rate cuts if inflation slows as expected. Market speculations now imply a 50% chance of an RBNZ rate cut by August. Meanwhile, the Business NZ manufacturing PMI fell to 41.1 in June, marking the 15th straight month of contraction. The Swiss franc traded around 0.90 per USD, approaching a 5-week low as traders assessed the economic and monetary outlook. Switzerland's inflation rate dropped to 1.3% in June, down from 1.4% in the previous 2 months. Last month, the Swiss National Bank lowered its key interest rate by 25 basis points for the second consecutive meeting, diverging from the Fed, which has not eased yet, and the ECB, which remains hesitant to reduce borrowing costs. Meanwhile, the US dollar has been on a downward trend since the last week of June, amid increasing bets that the Fed will lower borrowing costs this year. The British pound has outperformed major peers this year, buoyed by expectations that the Bank of England will keep interest rates at 16-year highs due to a strong economic recovery and persistent inflation in the services sector. The UK economy grew by 0.4% in June, doubling expectations and setting up a solid second quarter. While market expectations for a Bank of England rate cut in August have diminished, odds now favor a September start date. Persistent services sector inflation remains a challenge, running close to 6%, but optimism about political stability under the newly elected Labour government supports the pound's outlook. Upcoming labor market data and wage rates will be crucial for future Bank of England policy decisions. The euro reached four-week highs of $1.08 following a volatile session as traders assessed the political situation in France and the ECB's monetary outlook. The second round of France's parliamentary election ended in a hung parliament, with the left-wing New Popular Front winning the most votes but falling short of a majority. This outcome relieved investors, as it reduced the likelihood of radical policies. Meanwhile, the ECB is expected to cut interest rates once or twice this year, although policymakers remain cautious amid inflation uncertainties. Preliminary figures showed the euro area's annual inflation rate eased to 2.5% in June, but core inflation held steady at 2.9%, and services inflation was high at 4.1%. The Mexican peso strengthened past 17.8 per USD, recovering from its 15-month low of 18.75 on June 12. This recovery was fueled by expectations of a dovish Federal Reserve following softer-than-expected U.S. inflation data, leading to a weaker U.S. dollar. Investors also reviewed the latest minutes from Banxico, where policymakers expressed concerns over ongoing inflation challenges and emphasized the importance of a cautious approach to monetary policy. Mexico's annual headline inflation rose to 4.98% in June, exceeding market forecasts and hitting a one-year high. Additionally, consumer confidence climbed to 47.5, the highest since February 2019, reinforcing Banxico's rationale to maintain firm borrowing costs. WTI crude oil futures fell by 0.5% to settle at $82.20 per barrel on Friday, ending a two-day uptrend. This decline followed lower-than-expected U.S. inflation data for June, which bolstered hopes for a Federal Reserve interest rate cut. Traders now price in a 93% chance of a rate cut in September, up from 73% earlier in the week. Despite the slight pullback, oil prices are supported by strong summer demand, with U.S. jet fuel demand reaching its highest level since 2019 and gasoline demand hitting its highest since 2021. On the week, oil prices slightly fell, breaking a four-week winning streak. Gold held close to the $2,400 mark on Friday, slightly trimming gains from the prior session but remaining near record highs as markets continue to expect imminent rate cuts by the Federal Reserve. Despite U.S. producer prices rising more than expected in June, investor hopes for disinflation persisted following softer-than-expected CPI data. The alignment of moderating consumer inflation and sharp downward revisions in non-farm payroll counts meets the conditions needed by FOMC members to deliver a rate cut, leading investors to fully price in a rate cut by September. This also aligns with anticipated rate cuts by the ECB, BOE, and PBOC, reducing the opportunity cost of holding gold. U.S. stocks closed near record levels on Friday, fueled by rising expectations of a September rate cut and signs of easing inflation. The S&P 500 gained 0.5%, reaching an all-time high of 5,655 during the session. The Nasdaq 100 also rose 0.5%, rebounding from its worst day since April, while the Dow Jones jumped 247 points to finish above the 40,000 mark for the second time since May 17. Bank earnings were mixed. JP Morgan fell 1.2% despite strong revenue, Citigroup dropped 1.8% after beating forecasts, and Wells Fargo plunged 6% due to disappointing net interest income. For the week, the Dow led with a 1% gain, followed by the S&P 500 0.6% rise, while the Nasdaq 100 fell by 0.5%. Next week, the earnings season heats up with reports from big names like Goldman Sachs, BlackRock, United Health, Bank of America, Morgan Stanley, Charles Schwab, Johnson & Johnson, Netflix, and American Express. Speeches from several Federal Reserve officials, including Chair Powell, are highly anticipated. In the U.S., key economic data releases will cover retail sales, industrial production, export and import prices, building permits, and housing starts. Globally, China's Communist Party's third plenum, GDP growth rate, industrial production, retail sales, unemployment rate, and fixed asset investments will be closely watched. Inflation rates will be reported for Canada, the the UK, New Zealand, and Japan, while unemployment rates will be released for Australia and the UK. Trade balance figures from India, the Euro area, Italy, Japan, and Switzerland will also be in focus. In Germany, the ZEW Economic Sentiment Index will be released, and the UK will see data on GfK consumer confidence and retail sales. That brings us to the end of this week's Swing newsletter. As a reminder, don't forget to tune in for Mindset Mondays with Ryan Carthage starting at 6:30 a.m. Eastern Standard Time. Enjoy your weekend and good luck in the markets this week.